Hey, how's it going? It's your boy Josh, aka Joshcashflow. Listen, if you're into trading, whether you're trading crypto, forex, stocks, options, which is my cup of tea, there's a particular charting setup you need to know about that's been super hush hush, and I'm gonna give you the gems. Let's get straight in the video, guys. Let's drop this fire. Okay, guys, so hop in here, guys. I don't know whether you guys know how to chart support and resistance lines, but I'm going to show you exactly how to do that on Thinkorswim. This is the platform I'm on right now. And of course, this is real data. And there's something I want to show you guys that's been missing in your trading that's been a huge game changer. First, I'm going to show you guys how to generally chart, okay? Then I'm going to show you the specific charting setup that I use that's been a huge game changer for me in my trading, okay? First thing you want to start is 1 year, 1 day, okay? And you want to go to this dollar sign, something called the price tag. And what it does, guys, is if you double click it, it just shows you the price of an item, where it is. And the way to chart, guys, you want to start from left to right, okay, and hit support and resistance areas. Support is where the chart or the stock touches a particular price point several times. You need to at least have 2 touches for it to be support. And resistance is the opposite, a place where the stock hit more than twice and rejected. That's resistance. So you want to chart support and resistance from left to right and go from time frame to time frame. So this is the 1 year, 1 day chart, right? On the left side, for example, here, there's this area over here. This is like a huge area, so I charted it. And as you see, the stock also touched it here and here. So one thing you notice that if you chart from left to right, they become support and resistance areas for future trades, okay? Here's another area right here. We touched here, we touched here, and we almost touched here. So what you want to get is you know, the most significant areas, okay? You're not going to get everything, and it's not going to be perfect, but you want to have at least 2 touches, okay? So the next area I see of resistance is about right here, guys. We have resistance here, and we bounced off of it here, so it was support and resistance on this side. On the left side over here, I wanted to touch this area and this area, so that's resistance. And of course on top over here. And then you have to get the highs and the lows. So that's support and resistance. And what you're supposed to do is go from time frame to time frame and chart this out, and it help you in your trading. So I use the 1 year, 1 day. Then I go to the 4 hour. For those who are intraday traders, this is what you need to do. So if you're a day trader, you need this. Okay, I go 4 hours and chart the same thing. See if there's anything I missed. There's one area of support here that it seems I missed. And there's one area of resistance here it seems I missed, okay? So go to the 4 hour, then the 2 hour, okay, to see if there's anything you missed. Okay, there seems to be an area right about here. This is like a major area over here and over here as well, but this one has more than 1 touch. So I'm going to do this one, okay? Because we have a touch over here and a touch around here. And then you go to the 30-minute, and then you chart that as well, okay? So on the 30-minute, we have an area of resistance over here, and it touches here as well, so we can drag it all the way across, as you can see. And also resistance, we have this point over here, okay? As you guys can see, we touched, the bodies touched several times over here, so that's an area of support. And there's an area of resistance here, but since we already have this, I'm not gonna draw it. So not every side needs to be marked, but you need to get the most significant areas, okay? Now that that's over with, guys, go to the 5-minute chart, okay? And this is the T right here. These are the gems. This is what's gonna transform your trading. How? Because there are areas of support and resistance that you haven't been charting, okay? And it's called highs and lows of days. Guys, this right here is a game changer. Pay attention to what I'm about to show you, okay? What you want to do, guys, is 3 things. Number 1, the high of the, before every trading day, you want the high of the previous day, the low of day of the previous day, the pre-market high and the pre-market low, because those are going to be your areas of trading. So this is today, okay? Let's say today never happened. Okay, let's say it's pre-market. What we want to do is get the lows of yesterday, and the low of yesterday is right here, 155.98. So I'm going to tag it right there, and I'm going to edit it, and I'm just going to change the color. Okay, I'm going to change the color. I'm going to make it green. Okay, and I'm going to make it solid. Okay, because it's a low of day. See, it's green. High of day is up here. I'm going to do the same thing. Okay, that's the high of day of yesterday, and I'm going to make this green as well. Okay, and I'm going to make it solid. Okay, so now I have the low of yesterday and the high of yesterday. And then you also want to do pre-market high and pre-market low. Okay? And one thing I want you guys to notice, right, is that the high of yesterday became support pre-market. Just something for you to pay attention to, okay? But another thing I want you guys to do is pre-market high and pre-market low. So the gray area is pre-market. Pre-market low, I'll say this is your pre-market low. So I'll edit it, and I like pre-market low to be blue, light blue, okay? And then pre-market high, I will say, is right here before market open. And I'm going to edit it, and I'm going to make it light blue. Now, if all you had, it's on my screen disconnected. Hopefully you guys can see it again, guys. And I'm going to make this solid like I usually do. Now, if all you had, guys, is just the pre-market low, the pre-market high, look at where we bounced off of during intraday trading. Look how we bounced off of the low of the pre-market low, and then we moved higher during the day. Guys, these levels, pre-market low, pre-market high, day high, and day low from the previous day are super important. And you are actually supposed to go 2 days back. So not only pre-market high and market high and low of today, you want the market high and low of the previous day. So you want to mark, here we go. This is the high of the previous day. I'm going to make this solid. And this is the low of the previous day. I'm going to make that solid as well. And what you want to do is go at least 3 days back, marking the highs and the lows of the previous day. So if this is today, we haven't traded yet. Yesterday market hasn't opened. We have 1 day before, 2 days before. Really, you want to do one more, so 3 days before, okay? And mark it. Okay, you want the highs and lows of the previous day. And what you can do, guys, is actually name it. Okay, so it says show name on the right. You can put 3-day market low, okay, and just tag it, okay. I'm just gonna duplicate this right here just to get the market high. I'm gonna edit it and name it 3-day market high. And I want you guys to notice something, okay? Look at how the high of the day before and the low of the day before was where we pretty much hung around, okay? Now I'm going to share my screen again. It seems to be getting disconnected. I hope you guys are back. Okay, so look at how the high from 3 days ago and the low of 3 days ago, we stayed in that channel, okay? We stayed in that channel. Okay, and this is what I like to do. If we're below the lows of previous days, I'm more confident to get puts because I'm an options trader. If you're a stock trader, that means you're selling the stock. But if we're above the highs of previous days, I'm more confident to get calls. And what you notice is that these highs and lows act as support and resistance. So if you notice today, guys, this was 3 days ago high, and look at where we hit exactly to the dollar. We struggled around it, okay? We kept going between pre-market high and the high from 3 days ago. We went up and down into this channel. So if you'd had this drawn, let's say you were in calls, because this is a bull flag. Okay, let's say you wanted to trade a bull flag for calls. Okay. And if you want to know what that is, guys, of course, you know, we have a mini course you can sign up for. But like, let's say that you have a break of the high over here, you take this bull flag, you know that your profit target is, of course, 3-day high. Why? Because that's resistance. And you see it's tagging it. And once it broke it, where did it get to? Okay, the high of yesterday, that's where we headed up. That's where the high of 2 days ago. That's where we kind of headed for and stopped out. So these highs and lows of previous day are super important. As a day trader, guys, I'm telling you, this is where people miss a lot of profits and get clapped because they're not monitoring this support and resistance areas. Previous day highs, previous day lows, they're super key. The only day that we do pre-market high and low for, guys, is the day of. So the pre-market high of today, I'm going to share my screen again, guys. Sorry about that. Okay, the pre-market high the pre-market low of today and the pre-market high of today is the only place where I'm putting my cursor. Everywhere else, guys, you notice the green are the day highs and lows, and it's giving me potential profit targets and places to get out or to get in to a trade. So, for example, if I wanted to get into calls, I see we're bouncing off of here. Okay, here's another mini bull flag right here. If you can't see it, I do see it. Boom, look at that mini bull flag right there. Okay, and I'm gonna expand it out so it becomes more clear. Okay, so look at that bull flag. We break the bull flag to the upside right here. Okay, so after we break it, where would my profit target be? Of course, we're trying to head to pre-market high of day. Even though we came down a little bit, we ultimately went up and tagged the high from 3 days ago. So guys, at least 3 days out. Sometimes I like to do 5 days out as far as having the highs and lows of the days. They're super instrumental and super key in your trading, guys. Why? Because it's telling you where price action has been for that particular week. And if we're breaking above these things, then it's calls. If we're staying below it, it's puts. So for example, today we stayed above pre-market high. So because we stayed above pre-market high, I was primarily bullish today, okay? I made money on calls. If we had broken below pre-market highs and broken below pre-market lows, okay, and then we kept heading down, then I would have been more bearish. Okay, then I would have been more bearish in my trading sentiment. Okay, just having these is a huge indicator of how you can trade and make money trading. Okay, there's one more thing I like to combine with this, which is the 9 EMA strategy and the EMA crossovers. I'm going to show you and teach you all about that setup in the next video. But I just wanted to break this down and show you this first so you can get into it, learn it, and I'll catch you on the next one. Chat soon.